Biden teams take on technical recession. It's not real. According to the president, he says we are not going to be in a recession, but the report shows otherwise, and that could show that U.S. had 2 straight quarterly GDP declines. Now, if we head over to this other article, it says that what is a recession? Well, a recession is a significant, widespread, prolonged downturn in the economic activity. Because recessions often last 6 months or more, one popular rule of thumb is that 2 consecutive quarters of a decline in a country's gross domestic product, or GDP, constitutes for a recession. We are going to figure out those big important numbers tomorrow, along with a big meeting we're going to talk about that's going to happen today, along with what Janet Yellen said about a recession, and what could be happening to the stock market because of all this big information. And along with that, you got big companies like Apple, Microsoft, Meta, a bunch of big tech companies reporting in the stock market this week. So back to this article, we can see unemployment to inflation. The black line is unemployment, the reddish orange is inflation. As you can see, inflation is at almost all-time highs or nearing it at 9.1%. We haven't seen this since the early 80s. And then unemployment is down quite a bit from COVID, obviously, when we almost hit 15%. Now we're down to 3.6% last reported. So 9.1% inflation is obviously not something we like to see. And heading into a recession, we'd likely to see those numbers fall. If we were to be confirmed into a recession, you would see the inflation eventually turn itself over. Now, the Biden administration, along with many others, are claiming that we will not be in a recession, and they're trying to use other words. Now, let's see what Janet Yellen said about this the other day. The Treasury Secretary, Janet Yellen, expressed her confidence in the Federal Reserve's fight against inflation and said she does not see any sign that the U.S. economy is in a broad recession. We're likely to see some slowing of job creation, and that's what they keep on talking about and calling this whole recession. It's not a recession, it's a slowing of job creation. And as you can see from the articles down here, she keeps denying the economy is in a recession, which you can say what you want. You can express the definition of a recession in your own words, but the clear definition we already know is 2 negative quarters of GDP. So some meetings we have to take into consideration. Today at 2 p.m. Eastern Standard Time, we have a big Fed meeting that is going to discuss interest rates. Okay. So a 75 basis point or 3/4 point, like we saw back in March, hike would put the Fed fund rate in a range of 2.25 to 2.5. The Fed rate started raising interest rates in March when the Fed funds range was 0 to 0.25. Investors are looking for guidance from Powell. So Jerome Powell is the one that will be having this meeting and will be discussing what their plan is for the next several months moving forward with inflation and interest rates. So looking at the SPY, which is the overall direction of the S&P 500, you can see that we have now finally crossed over the simple moving average line a couple of weeks ago and are trading above it, meaning that we are in an overall bullish territory in the short term with this 180-day simple moving average line. The last time that we got over this line was quite a while ago. It was heading towards the end of May, early June, and then we took a sharp decline, okay? Now, looking forward, this is going to be a big week because not only are we reporting big tech earnings from still Apple, Microsoft, Meta, and a bunch of other companies, we are also looking forward to the meeting today at 2 p.m. Eastern Standard Time or 11 a.m. Pacific Standard Time, and then the big meeting tomorrow that reveals whether or not we are going to be in a recession with the GDP numbers that come out. So after today's meeting at 2 o'clock Eastern Standard Time, I definitely think the market is going to be choppy. If we take a look at what we're looking at today, right now we're bullish. We're looking green. We're up 1.5% on the day, and I think that we're going to see this continue until that Fed meeting starts to come out. Once the Fed starts talking about raising interest rates again, I think we'll see some choppiness in the market. Now, we may still finish bullish on the day, or we may have a sharp decline. So it's going to be very, very volatile in the afternoon today. And looking into tomorrow morning is going to be very, very choppy when those numbers come out. So we'll have to see what happens heading into the latter part of this week. If you guys enjoyed this content, don't forget to hit that subscribe button and like for more videos. I'll catch you guys in the next one. Peace out, everybody.